You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever interesting, at least we hope so, Options Insider Radio Network. You guys know how to find us by now. You can subscribe to Vol Views by itself or get the whole kit and caboodle, the whole network via wherever you find your favorite programs, your iTunes, your TuneIns, your Stitchers, our mobile app, our website, a lot of partner sites, and so on and so forth. Chances are, if you search for the show, it'll pop up all over the place on the web, every place, close, near, far, and sundry, so no problems finding that, I hope. But if you want to get the full kit and caboodle, I do recommend you get the network. It makes your life a lot easier, and we'll keep you occupied at the very least. I make no other promises, but we will keep you occupied with options-oriented content. And of course, for those of you who like to listen live, don't want to wait for the podcast every Friday, noon Central, 1 p.m. Eastern, via the old Mixlers, MIXLR. And do send in those questions, those comments, and a lot of you have been busy doing just that this week. We'll get to a bunch of them today. We do, yes, we do like to hear from you guys. And joining me on the old program today, we should have the Greasy Meatball joining us in studio any minute. But we're also joined a little bit farther afield, which is pretty much down the street, from the home of all things volatility, a.k.a. the Cboe, where we are joined by good old Kevin Davitt. He is a senior instructor over there at the Options Institute at the CBOE. Kevin, welcome back to the Volatility Views show, sir.
Thanks for having me back.
2 weeks in a row. To what do we owe the pleasure, sir?
To general, I won the fight. We were talking about it just briefly before, and Russell and I duke it out. And I'm an amazing arm wrestler. I'm just kidding, but I will be doing this on and off with greater frequency. It is my pleasure.
I knew there was a real reason why Russell had all those scars he was posting on Twitter. He mentioned something about a garage door and something. I knew you two were slugging it out every week to see who got the hot seats. And now I'm glad you've admitted it to the world. All right, with all of our secrets open and bare, let's keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, the portion of the show where we do, surprise, surprise, review the week's volatility action. That could be trades, that could be trends, that could be macro or micro, that could be unusual activity, all sorts of fun stuff going on across the volatility spectrum. As we are recording this and streaming this live, again, noon Central, 1 p.m. Eastern here. Most of the major indices showing a lot of green on the screen today. Pretty much the S&P and the Dow up 0.5% or a little bit north of that. Tech-heavy NASDAQ, a bit of a laggard, only up about 0.3 of a percentage point or so. And of course, all this green on the screen means VIX taking yet another exhale today. VIX Cash, anyway, hovering right around the 18 handle as we're kicking off the show here. So obviously well off the, shall we say, extreme highs we saw over the past week. Kevin, there's a lot to break down over this past week. It's not quite as tumultuous as, 2 weeks ago, but still, we're all still kind of, I think, dealing with the fallout from that and seeing what's going on in the marketplace and how it's affecting different products and how a lot of people maybe thought things performed the way they thought, or other people maybe thinking things didn't perform the way they thought. So what were your interesting trades, interesting takeaways from this week's volatility action, sir?
So it certainly is wild in that this time last week we were having our snowpocalypse in Chicago, and when we were maybe going to do the crystal ball thing, cash VIX was, I think, up above 40 midday.
Yes, it was. It spiked above 40. So I strategically had us avoid predicting, and it worked out. Well, I think it worked out in everyone's favor.
And even then, we were saying, I forget exactly how you broke down the titles for it, but the cash VIX closed last Friday below 30, right? Like around 29 and change. So I think the bigger takeaway here is arguably that volatility is non-directional. We have seen vicious moves both lower and higher. Now, the way that people react to up moves is different, and I think VIX does a good job of accounting for that, hence volatility getting crushed all week long. But we've seen really, really face-ripping up days kind of day after day this week. Again, I think I pointed this out last week, but if you look at the S&Ps, there were something like 94 days at the tail end of last year where the SPX didn't close up or down 1%. And now in the past 2 weeks, I think there's been 2 days where that didn't happen. So again, just cliff notes here. Volatility is non-directional. People behave in a less panicked manner when that volatility is on the way up, like markets moving higher. But conceptually, a short gamma position over the past couple of weeks would have been really difficult to manage.
Yes, that would have been a challenge quite a bit. I'm looking forward when the meatball gets here to see. I'm not sure if he has launched his Vol Fund yet, and if so, what it's been like launching a new product and new fund into this maelstrom of madness that is the volatility space. But you're right, that is a good point. We've touched on it many times in the past on this program. People, I think in general, when they see the VIX, and they pointed out, they kind of decry this about the VIX, that it has in general a bit of a downside bias to it. I mean, look at last week, a decent sell-off in the S&P, but it certainly wasn't anywhere close to the massive explosion we saw in the VIX. And now that we're kind of coming off, we're seeing the VIX come off. So there is definitely, I think just across the board, people have this downside bias when it comes to thinking about volatility. But you're right, at the end of the day, a move is a move, upside, downside. The calculation should not care which way it is. People should not care which way it is. You could have an upside crash. It's rare, but it does happen. I've lived through a few myself, and they could be maybe not quite as terrifying, but just as confusing, perhaps, as a big downside crash, because you don't have all the cacophony, all the noise around it that you usually do with a big downside sell-off. But still, people always forget that point, that volatility is indeed, it doesn't care which way you're going, as long as you're moving. You can't go and you can't stay here. You can get to go somewhere. They don't care where, as long as you don't stay here. Well, a lot of things have been developed. One thing a lot of people were watching, Kevin, and kind of waiting for and perhaps hoping for with a lot of cross fingers, and a lot of people who are out there trading things like VXX and others were certainly waiting for this moment when we'd see the VIX contango return to the VIX Futures. And I guess you could kind of say were there. There is an ever so gentle upward slope right now. So at least we're not in the ridiculously steep backwardation that we were, this time a week or so ago, where it was just all front month and second month all the time. In fact, looking at the chain right now out there, it's almost, I think you almost really call it more of a flat curve, pretty much. Like the first 4 or 5 month contracts are almost neck and neck. They're pretty much flat, which is an unusual occurrence in and of itself. Usually you'll see a little bit of bit or dip to the front there, but this time it's pretty much flat. So you could call it a slight contango because the longest term contracts are a little bit more. But other than that, it's not quite the steep contango we have come to know. But things are moving around. The cash, again, over the front month futures there. So interesting developments there. But a lot of people have been waiting for that moment. And I guess you can kind of say we're there, or at the very least, we're out of backwardation. Is that something you've been watching and waiting for, Kevin? Does that give you maybe a sign, a sense of relief that things are returning to normal? Or do you think maybe something else is up there?
The short answer is it's something that we watch all the time. The longer answer is it would behold anyone that's trading VXX or any of these volatility-linked exchange-traded products to do likewise, because many of them are very much tethered to the relationship between the front end of the VIX futures curve. And if you didn't know that beforehand, we talked last week kind of at length about the onus, at least from my perspective, and again, I'm not trying to marginalize those that took heat or whose portfolios were burdened by the volatility that we've seen lately. I'm not marginalizing that. But if you don't understand in the first place why you are making money, or after something happens why you're losing money, that is your fault. And these products, if you are trading a VXX, understanding the importance of what those front 2 months in the volatility's term structure, how they are relating to one another, you should have been doing that before you ever put something on in VIX, in my opinion. And so events like this become signposts for people that either you kind of distinguish the people that really understand how these products work and the ecosystem and the rest. And then the other thing, and this is going back to sort of where we started, is that these become good opportunities to talk to people about thinking in terms of percentage moves, and the fact that when you have a low base, whether it's a $5 stock, and again, I'm just picking that number, or a $15 stock, or a $1,500 stock, thinking in percentage terms and what that means is a really, really good idea, because bigger percentage moves, like your just raw notional moves on a low base, make a big percentage difference, right? And that tends to be why volatility implieds come in when things move higher. So just I work in the education arm of the exchange, and so using real-life examples to illustrate why some of these bigger themes make sense, and particularly with respect to volatility, I think we've had a whole lot of real-life meaningful examples in the past 2 weeks. So that's my takeaway.
Yeah, this must have been a field day for you guys at the Institute. Really quickly, just off topic, I'm curious, what were some of the biggest questions you guys were getting from your students and clients and mentees out there over the course of the past couple of weeks?
What I think really you kind of touched on it in some way. Some riff on, wait, what happened, because we've been so conditioned to these products that in some way are related to VIX doing what we've expected them to, and that changed. And to me, that that indicates that people didn't really understand how the products that they were using, and for probably quite some time making money, not understanding why they were making money, that exposes some ignorance. And again, I am not trying for that to, I hope that doesn't come across the wrong way. I have lost money countless times. I have made so many mistakes. And in some situations historically, it's because I didn't really understand the product that I was trading. And so that hubris typically gets exposed, or whatever the saying is about when the tide goes out, you find out who's naked. And so that is a good thing. You're either forced to learn from it or you shy away from a product in the future. And I'm sure both will happen in light or in the wake of what has transpired over the past couple
Kevin,
of weeks.
why would they have to learn? I mean, XIV only went up until it didn't, right? So, I mean,
Exactly.
there was no learning necessary.
Yes, and that is what I think is behind a lot of the, quite frankly, I'm pissed off because I lost money and I'm going to dress it up as a question. You just don't get a whole lot of good questions about that stuff when post-Brexit XIV goes from 20 to 150. Well, it was doing what it was designed to do then, just like it did 2 weeks ago. And if you didn't understand why it was going up with far greater velocity than the broad market, I have a hard time bringing myself to say I'm sorry.
Kevin, no pity, no remorse there. I like it. We are finally joined in studio by the greasiest of meatballs. You know, he's so greasy, listeners, that it's hard for him to walk down the street. He slips and slides, but he made it here in one piece. Mr. Meatball, welcome to the show. And what has been catching your eye in this volatility maelstrom we're in these days?
Yeah, kind of a weird one today, right? You know, there's this kind of like weird news about Mueller that just came out where he's indicting a bunch of Russians. And, you know, that seems to have moved the market here while we're chatting. But, yeah, you know, as to XIV, yesterday was its last day. I think that is probably contributing, you know, as it shuts down. I think that's going to throw around a little bit of the funkiness that we're seeing. We're seeing VIX down, but VIX Futures still firm. You know, at one point they looked like they wanted to die and decided against it. I still think there's a decent chance that happens, but you know, at one point we were up pretty big today, and they gave away that on this weird Mueller news that really doesn't appear to be much other than a clear indictment of Russians, which I think we were expecting. So kind of an interesting piece. You know, it says, you know, that they were allegedly helping Donald Trump and disparaging Clinton. It was a disinformation campaign. So I don't know. It's a little bit of funkiness. It doesn't sound like there's really a lot to it, but it's definitely moving. We were up 20. We're now up 5. So we gave away a lot fast. We'll see whether that holds. It could certainly get bought. I would not be surprised if it didn't. But, you know, here we are, and, you know, we're going into a long weekend, and I'm not surprised that VIX Futures seem to have kind of found a spot to kind of sit at. I'm not surprised that the VIX is down, but it's not done for. I think, you know, for those with a recency bias, they're looking for we got the big VIX spike, and now we go right back down. This is going to look a lot more like a 2015 or like an August 2015 or, you know, when was the last time we had a major sell-off prior to the 2015? Maybe
2015 is the last time, but then before that, one of these little,
2011?
Well, we had intraday ones, remember, if you intra-show ones.
You had these like
with,
weird ones.
Last time, the Hillary email, of course, on Volview was probably the most infamous one where stuff started getting crushed on a Friday and continued into the Monday after.
Yeah, boy, we have a history.
Volview's
Option Insider Volviews definitely does. You know, we're recording as the Mueller stuff is coming out, then last Monday we're doing option block while XIV's blowing up.
Our listeners have noted that many times. You guys start talking and the market starts crapping out. So you're scaring somebody.
Yeah. So when you have the two marks on the line, things are going to
buy puts. Get the hell out of Dodge.
Buy puts.
You know, we were talking about, as you mentioned the futures, we were talking about this right before you walked in. It is kind of weird. I have it kind of up in front of me right now. People were excited. Oh, we're back to contango. It's kind of hard to really say we're back to. We're out of it. We're out of super steep backwardation, but we're kind of in this weird, almost super flat area.
It's like no man's
yeah,
land.
it's kind of like a no man. Does that disconcert you at all, or is that kind of what you expect?
I mean, I think that we're gonna be in kind of this flat no man's land until VIX itself gets below the cash index, or excuse me, the futures. Until the cash index gets below the futures, and then we are going to be there until, and then we'll be flat for a while. Then eventually they'll come in and dump it, but I don't know when or how.
Speaking of dumping or not dumping in the futures out there, the COT reports were out. Of course, the COT report, listeners, a lagging indicator, so take it with this one's kind of more of a duh, I think, for this one. The last one is dated February 6th. I don't know if you know, Mark, but maybe some things happened on February 6th. So surprise, surprise. The COT report showing that there was a surprise spur in long positions, a record increase in long positions in VIX Futures, which you might say, hey, duh, no brainer. The VIX Futures surged in the after hours, surged intraday on Monday and again on Tuesday, which is, of course, the 6th. So that doesn't really surprise. What is surprising, perhaps, is this isn't really as much of naked people diving in to get long as it is people taking the shorts off the table as fast as they possibly could, which pretty much is also what you might expect, given the fact that all those short VIX positions were suddenly in their face very aggressively. The non-commercial short contracts plunged more than 40% over the course of that report. Long contracts only increasing by 10%. So it wasn't like you might have expected people come in and just getting extremely long VIX futures. That was the case, but not so much the case in terms of people diving in. It was more people scrambling to cover their shorts lest they not have the opportunity to do that again in the near future. All right, now it's the time we move on from the VIX futures. We get into the old options. And when we do that, it's time for, usually, Russell, I got to change this intro now, Kevin. You're making me work. It's time now for Kevin's weekly rundown.
Now, Russell's weekly rundown.
All right, everybody, you guys know the drill. It's time for Kevin to hold court for, let's say, 32 minutes on all things VIX weekly options. Have at it, sir. I'm sure you have at least 27 pages of notes from this week's action.
I have exactly 27 pages, so settle in, everyone.
How did I know?
I maybe have 32 seconds. After weeks like this, I mean, talking about kind of any trade when you have such a big range in both the spot or cash VIX and futures is a little difficult without a reference. So, I'm going to go back to Monday really briefly, which was the last kind of spat higher. We had, March futures around 21 and a cash VIX up around 30, which is essentially the highest for the week. And somebody bought the Feb 27th. I shouldn't laugh. But now we're talking about strikes that seemed unthinkable not that long ago. They bought the Feb 27th, end of this month. 60-70 call spread for 7 cents, and just based on open interest, that was an opening trade. So somebody was certainly panicked about a return to the wildness that we saw the week before. But I think more instructive or more interesting, given this flat term structure, and maybe we're trying to find a slightly higher base on VIX, is looking at some of these shorter dated straddles. And I pulled this yesterday, but the Feb, the weekly next week, Feb 19, and I can look at this again today to see how different it is, but it was around 330. Now today it's more like 310. But even there, when you think about ranges that imply looking out just a couple of days, these expire on Wednesday, of 22 to 16, that still shows some concern in the broad market. And then if you look at the wider strangles, like a 16, 22 or 23, that thing is nearly $1 bid with a call skew, and the call skew is typical in VIX options for fairly obvious reasons. Might I point you to the past couple of weeks? Now, to your point on what happened with open interest and the fact that this data comes from February 6th, if you don't understand that naked short positions have undefined risk, the past couple of weeks should illustrate that, the fact that some of these were arguably crowded trades. And one thing that we didn't mention because last week was pretty wild, is that the OCC, which oversees margining on VIX Futures, hiked margins in the heels of that move last week, and that forces some people, arguably a lot of people, out of positions. If you are pushing any kind of margin limit, they pretty much doubled the margin requirements for the front 2 months last week, so that bears pointing out. That wraps up my 32-minute session.
Impressive, sir. You took a whopping decent number of minutes, so I will put that down. Russell will undoubtedly acknowledge your success there. Let's move on to the big VIX mothership. An active week, if not quite as rock'em sock'em robots as we mentioned. By the way, we mentioned at the top of the show, our old friend VVIX, still elevated, but nowhere near the lofty north of 200 levels it was about a week ago. It's comparatively quiet, 116 off about 6.5 handles today. So the volatility of VIX coming in as we speak. Moving on to the big VIX mothership options. Like I said, an active week, a strong week, not quite a madness week like we saw last week where every day was many, many millions of contracts. The ADV hovering there still north of 1 million, which shows you how active it has been. About 1,000,005 contracts, or 1.05 million contracts there to be precise. We're hovering right now at about 500,000 contracts, so we'll see. Halfway through the day, maybe it will break that. Yesterday, about 1.12 million. Tuesday, about nearly 2 million. And Monday, just north of 2 million, 2.12 million. So pretty robust in terms of volume out there. Most of the days, except for Thursday, pretty much north of it. And also just showing you how much A, the hedges were wiped out in the big spike, and B, people were speccing to the downside in VIX by trading puts, because the VIX call to put is the lowest that I can remember seeing it almost maybe since we've been doing this show, Mark. I don't know, 2.3. Can you remember another time where the VIX call to put has been that low in recent memory? I'm hard pressed to think of a date that it was that low.
No, I cannot think of it being that low, but I'll tell you, just a crazy busy the last few weeks. VIX, VXX, all these names have just been insane. Just lots and lots of volume on the futures, lots of volume. I saw like over 1 million trade in the futures, I want to say, last week. A couple of times. The average daily volume of VIX options is now over 1 million contracts a day.
So I'm just saying it's 1.05 million, which is insanity.
Crazy.
When it hovered between like
Usually
650 and 700 last year.
Longest period of time. But that's how active it is. I would note that we had some major players close up a lot of dollars. It was interesting. MRA, macro risk advisors, they're a good group of guys. They
make a living off tracking what they call the elephant, we call the whale, and the 50 Cent and all those other guys.
Yeah, they come up with names. That guy finally showed how a long gamma position can make you money. You lose, then you can make
if you have enough money to stay at the table infinitely, you can do well in VIX calls. You can do
extremely well.
Yes.
And then the quote unquote elephant, the guy with with the crazy 1x2 versus short puts, he closed down everything. So all of the major players are pretty much out right now.
It's funny you mentioned the elephant. We call him the whale here on the show, by the way. Macro Risk Advisors does not make the volatility nicknames. We do here on this show. But, it's funny. We talked about him last week, and he usually puts this thing on in a ratio. He does it 1x2. But he covered it in pretty much a 1-to-1 ratio, which pretty much meant he was still naked short on that upside leg, which you could probably see as a trader why you maybe wouldn't scramble to take the rest of that leg off. But it also was looking like he had the point with, obviously at max VIX, it wasn't looking too good for him. That naked short leg was coming back to bite him, which was always the part I kind of wondered about. I know he gave himself a lot of room to run on the upside, but I kind of wondered in the extreme VIX move that he's kind of playing for, if it comes, he might be wearing that. And so you're saying he took off the second leg that he left open?
But my understanding is he did pretty well on the hedge. Speaking of hedges, we have not talked since everything blew up on Monday, and I maybe I mentioned this on Option Block, but maybe not. So a week ago Monday, I was sitting on 1,000 March 25 calls.
this for the new fund or this for the
current
line
fund.
of demarcation?
So
fund?
this is the line of demarcation. So I was sitting on 1,000 March calls. At March 25 calls, VIX is around 20 at the time, 21.
This time last week?
This time a week ago Monday.
Oh, Monday.
So Monday morning,
like
a week.
Like 19 or something.
Like the 5th, yeah. So the morning of the 5th, the VIX around 19. I'm sitting on the quarter calls, and they're 90 cents, 95 cents. And I'm going, you know what? What I'd done is legged out of a spread, right? I'd sold a spread at like a quarter, and I was going to get the leg out of it for 20 cents on a big up move. So I was happy I was not going to eat it, right? And I'm talking to Andrew, and I'm like, I don't know. What do you think? Should we hang on to some of these? He was like, yeah, you can if you want. I said, forget it. Let's just get rid of these. They're just going to die on me.
Oh.
So I sold out of all of them at an average price of 93 cents. The next day, they were like,
I don't know if I even want to know the
they
end
were
of the
like
story.
$5.
Wow.
I had made $500,000 on 1,000 lot.
So you had a short vertical and you took off the short leg and you left the long leg on?
Yeah, so I bought the short leg in for $1.15.
As you do.
And then I was sitting long the 25s, and I was like, wow, I'm gonna get out of this thing for a little better than a scratch. That's all. Go me. And I made money on the hedge. Right,
you had long futures.
I had some long call spread somewhere else against it, and a little one. So I was like, I'll make a little money on this. That's not that bad, right? We'll go for the single. It would have been like the grand slam. It would have been.
That's the inner risk manager in Andrew coming out.
Well, it's the inner risk manager in me.
Yeah. I understand why you did it, but that's one of those ones that'll leave a mark.
I know. Yes, exactly. I'm sitting there. Just thinking about it, about how well I would have done. Now, at the same time, that afternoon, Andrew and I'd put on like a little VXX back spread, and a call spread I bought for $2. I was selling 5.5 within an hour, and it was pretty amazing.
If you can't responsibly sit there on 1,000 long upside VIX calls for any longer than a day or two.
What he wanted to do, what we thought about doing, was actually doing the. At the time, they were 90. We could have sold the 40s at 30 cents and been long call for it for 60.
Nice vertical, yeah.
That wouldn't have been bad. That vertical would have still been $3. So would have made, $240,000. That wouldn't have been bad. Better than a kick in the shin.
Would have paid for lunch today here in the studio.
Would have bought lunch.
Maybe at Gibson's afterwards.
Oh yeah.
Well, upgraded a little bit.
Yeah. Well, that'll be this June. We'll probably be at Gibson's again. That'll be fun.
And speaking of funds, when are you launching the big vol fund? Obviously, this last couple of weeks would have been a tumultuous time to launch it.
We're trying to get the dollars wired to do our first trade either today or Monday. This being expiration Friday, this is kind of the day that we like to do it. Looks like it'll be Monday to get fully papered, and then we're going to be good to go. And we're going to be rolling up people in. We're still doing our pre-launch pricing on the new fund until the end of next month. So if you have interest in a smarter way to be along the S&P, then you can just reach out to me.
So, AKA buying the 25 calls in VIX every month,
yes.
Repeat like clockwork and roll.
Call me 25 cents, because I'm always going to buy the quarters.
AKA the Kevin Cole getting long, Artemis,
Chris Cole.
Getting long, got Kevin on the brain here.
Yeah, I know, Chris Cole.
Speaking of Kevin, let's get him back on. Kevin, we're talking a lot of VIX options activity in the big mothership. I know you've been busy watching the weeklies, but anything catching your eye out here in the big VIX mothership? Obviously, we talked about our friend, the whale there, our other friend, 50 Cent. Anything catching your eye out there in the big VIX mothership options this week?
Well, let's not let those stories die. I think that those types of strategies have been pushed aside in a lot of the public relations stuff lately. The people, the institutional type players that have been able to manage volatility positions that are put on as hedges, it has been textbook to see these things work as they're designed to over the past couple of weeks, right? And so I think talking more about that, now I'm fully aware that fear sells, right? And so headlines like that, or whatever, some guy that had been trading XIV and gets for years and his work is wiped out, that's because you didn't understand how and why you were making money. And these people that understand the utility of hedges and rolling them and not trying to time these things, I think deserves more ink than it's gotten.
Correct.
Granted, I'm a little bit talking the party line here, but I believe
think
that's
the
been
corporate line,
sort of lost in the shuffle here.
I believe it's
how
called
well
I believe
these
it's called
things
the
worked
corporate
when they're
message,
meant to.
not the party line. But you're right, but Kevin, you're right is the problem. So, I got into this with a lot of people. You have a lot of it was amazing. All the VIX, Mike, me, and Matt, otherwise known as the three, the Mark, Matt, and Mike. When we're all hanging out, we were actually talking about this. The Typhon guys call them vol tourists. People didn't really understand. And then after all those guys got really popped, you have all of this whole new group of people that had nothing to do with the space, don't understand the space, that are now stepping in and basically disparaging the space, that without really recognizing that, as much as, what happened with some of these retail traders in XIV and SVXY is kind of tragic, they serve a purpose. That short vol position is there to provide liquidity to people that want to put on hedges. The reason why it's not insanely expensive to go and manage a futures position in VIX or an options position as VIX is because there are people that are willing to take the short vol line, the short vol trade, and those people did their job in the last couple of weeks. They ate it while those putting on a hedge made money. That is the way it's supposed to work. Right? One side wins, one side loses.
Yeah, it has been an interesting week of all sorts of fun headlines. Speaking of which, Mark, I know you've been writing some interesting pieces on all this stuff going on in what do they call it? They call it whistleblower land. Call it what you will. It has been fascinating. It seems like everything old is kind of new again in this space. We've talked about this before on the show. Then it seems like it kind of goes away. Then something new comes out and claiming they have some new wrinkle on this. I know you've written extensively on this. What are your thoughts on that?
Yeah, I know Kevin probably can't really make much of a comment on it because it's been kicked to FINRA, but the SEC filing, CFTC filing that went on Monday, on Monday, I got an email from a Bloomberg reporter asking me what I thought, and my first line was, the filing is a piece of garbage. It is total crap, is what I wrote. Now, she said, can I quote that? And I said, you can, no. You can use something like their claims are dubious. I borrowed the word dubious from you. But
my invoice will be in the mail, sir.
Yes, having read that filing, on top of the fact that they refer to the SIBO as CME on multiple occasions, and clearly the trader does not understand that the movements in the cash index have no effect on the futures. And I've seen, for those of you who don't know, there are two main market makers that stream quotes on SPX. Then the book goes around it, right? So the two main market makers, I believe, are Chicago Trading Corp and Kevin, stop me if I want to say Chicago Trading Corp and Susk. But, who am I wrong? Do you know who's the quote streamers are?
I would rather, they are big in a lot of index products, and so you would not be wrong in saying that.
Yeah, there are two main groups that are like the quote-unquote designated quote streamers, and everybody's basically on a hybrid 2.0 version of Rays in the SPX. And, at any given time, maybe the market goes crazy, or they'll have a system thing where they're adjusting their vols, and it'll go wide, and you'll see the VIX move, right? So Chicago Trading Corp needs to redo their vols, so they go $5 wide so they don't pick themselves off, right? And then you see the VIX move 50 cents or a buck, and you see the VIX move 50 cents or a buck. And you know how much the VIX futures move when the VIX makes that crazy move? 0. It doesn't even move. So the idea that I could go in and actually affect VIX trading or VIX ETN trading or VIX ETF trading or VIX option trading by messing around with SPX quotes without even making a trade is just
that was the thing that rang
recalculous.
Extremely weird to me. In fact, I know Nikolai. He does a lot of stuff at Bloomberg.
Yeah, he's a
I
smart
wrote to him.
guy.
He's really good. He's one of the better guys on this. And when I saw his name attached to it, I reached out to him and I said, "Hey, Nikolai, not for what it's worth, these two things are not really related. You could make the VIX cash dance all you want.
Yeah.
Doesn't mean people are going to come scramble to buy the futures. It's not how it works. So yeah, that was a little strange to me.
I think even the Bloomberg guys did not believe. I think even the people breaking the story were like laughing that they were breaking the story. But, it's as dubious as it is, given the last couple of weeks, it's, it would have to be labeled as newsworthy, even if it was probably
it's
not,
out there. And one thing
true.
I am happy about all this is it's we're going to see FINRA dig into this
Yes.
once and for all, which is good. Because otherwise things are going to keep popping up every couple of months. A new study, a new whistleblower, call it what you will. And it's about time we had some good hard data on it.
Yeah.
And so FINRA will come in, they'll dig into this thing, and we'll put teeth to it once and for all. And that'll be a good thing, which is I think what a lot of people are waiting for. On this.
I mean, true or false, there are some of the accusations that true or false fall under the category of plausible, and then there are true or false ones that fall under the category of completely implausible, and this one falls borderline under completely implausible.
Yeah, it's funny. When I saw it coming up, I was like, what makes this one different? All the other ones we've talked about, and this one is just even more outlandish. People, for some reason, are flocking to it, which is, as always, pretty crazy. Speaking of which, a lot of people are flocking to things. We talked about this before on the show, obviously. A lot of people like to come at VIX via our old friend VXX. We talked about how the clock got kind of reset out there for a while there from an erosion perspective. Also, it seemed like this week they really came for the vol out there and all things, because people were writing in for a while saying, wow, this stuff is still really rich on the downside. I think I was joking with this about Andrew last week in the midst of all the craziness. We were kind of joking back and forth about what levels they were still pricing at some of these crazy out-of-the-money VXX puts and things. Seems like they finally came for the vol in VXX this week. So all of you guys who were waiting for that moment, we're happy. All of you who had loaded up on premium, maybe taking this chance to average down a little bit, but maybe you wanted to get in early, try to capture a reversion, which unfortunately it did, but the vol coming out kind of hurt that. Have you guys been slinging any VXX?
We have. We basically reset back down to kind of where we were Monday before everything blew up. If you think about it, that's kind of where we're at.
Those puts are back to that one. You still like the 15? What was it? 10 strike you guys liked out there
in
VXX puts.
Oh yeah, those actually. What's interesting is with this, they've actually blasted the 10 puts. I'm glad I sold off some of them, but what I have done, they've gotten a little overboard. I've been buying the. They have been willing to sell me as many of the 2019 quarter puts as I want, and I've been buying them for like $3.25, $3.30, $3.40.
I have to admit, I've done the same thing. I've been playing around the 20 strike for a while.
You
now.
Want to sell me those quarters at $3.30? I'll buy as many.
It's
as
very
you
enticing.
Want to send me.
I have to admit.
I love them, and I'm going to make money sitting on those off of you. My 10s, I may not. I maybe am going to regret not selling the balance at 50 cents.
They kept those propped up for so long. I was stunned how much people kept coming in for those 10s
and actually,
all week.
Yesterday, there was somebody that came in and sold 50,000 of them at 15 cents. I think
someone finally broke. They can't take it anymore.
But yeah, we've reset back to where we were Monday in terms of VXX. I think it's got another leg down back to maybe 30. That could happen pretty fast. But you're going to need to see this VIX stuff work out. People are going to have to look at this Mueller thing and realize that it's not really a thing, and let vol die in that respect. So there's definitely some other pieces to move around, but it's going to be interesting. Here's kind of an interesting piece. I think we talked about this last week. There is less short sellers in the VIX Futures now. So XIV is gone.
Go figure.
Yeah, XIV is gone.
How could that possibly have happened?
And honestly, and I actually wrote about this for the street yesterday, it's amazing. SVXY is 130 and everybody wants it. Now that it's 12 and 13, and actually a pretty safe investment on a relative basis.
Interesting. I asked our audience about that last week, and they were evenly split on whether it would survive the year. 42% no, 42% yes.
Well, no. I would have been 100% yes. I mean, once VIX Futures, once the March future gets it to 20 or 17, for it to go up that much, you think a future is going to go from 17 to 35 overnight.
But there's the lingering regulatory aspect. We don't know what the hell is going to happen there. They could decide to come for this thing. In which case,
you mean like...
I agree with you. VIX Futures wise, it does seem unlikely that it will implode again. But the unknowns of politics, it's got to be at least a 5 delta that thing could go to 0.
Here is the one thing I would say, and what is kind of hindsight 2020. How is it that and I'm not making I'm talking more about the system. And maybe like what's wrong with the retail space, right? Is that brokers don't know what to be risk averse around. How is it that you're allowed to buy XIV, but you don't have level one option?
That's a great point.
Clearance.
You should have some sort of clearance.
If you don't understand what a short put is, you shouldn't buy XIV, and because really that's all XIV in a lot of ways was, you could call it a short call in VIX or a short put in the S&P. That's really what it was. That's it.
Yeah, it's funny. There is probably some interesting blame to go around on a bunch of fronts out there with those. Maybe not disclaiming them enough, lumping them in next to other ETFs and ETPs that were far more stable, like SPY. Here's SPY. Here's XIV right next to it in the same tab. Must be safe, right? So there's a lot of issues like that have to go. We probably could debate this for a while, but I know we got a lot of people who have questions. So let's keep on rolling. Kevin, put your answering question.
Let's not forget how much Kevin is loving this whole conversation.
Let's get into Kevin. Put your.
Why isn't Kevin chiming in so much?
Put your question answering pants on, Kevin, because it's time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the volatility voicemail. You guys have a lot of questions. Let's get to it. I won't even make you pontificate. Spoiler alert, you guys are not trusting of Bitcoin. 44% saying that's the product you're most concerned about over the next 30 days. Let's get into your questions. We've been gassing on. A lot of things to talk about this week, though. Volbug, he's written in a bunch of times. Volbug says, Mark and Friends. Well, I like that. We should call the show Mark and Friends. I like that. That's the new name.
Only if it's about me, not you.
I don't think so. All right, Mark and Friends.
Well, we don't know. We both spell our name M-A-R-K.
Now that I think we can assume he's referring to. Now that SVXY has I think he said has been reset or beaten. Would another big VIX surge day have the same impact on it? Thanks. This is kind of what we were just talking about. Maybe Kevin will give you a chance to weigh in on all things like this. We talked about this just earlier, how SVXY and XIV took a big hit when the VIX Futures moved. Of course, he mentions it's kind of been reset. The VIX Futures, obviously now they've come in, but for a while they were still extremely backwards. So kind of made a repeat less probable occurrence. What would you have to say here to our friend Volbug, who's worried another big VIX up day could wipe out XVXY?
The short answer from my standpoint would be yes, that is absolutely possible. The longer answer is understand what SVXY is replicating and watch your front 2 months and think in percentage terms. And then the even longer answer has to do with understanding whether products are exchange-traded notes, exchange-traded funds, whether what they hold is clearly outlined. SVXY, that is the case, but there isn't a definitive termination event, which was the case with XIV, which is in large part why XIV options were never available. So this is a teaching moment from my standpoint, is it possible if we saw the blend between the front 2 months move up 90% in a day again? Yes, this thing replicates the inverse of 1 day returns on that. So is it possible? Yes. Is it likely? I don't know. But understand what your product is designed to do, whether it has an ETF, ETN wrapper. Understand that it is futures driven.
Yeah, and I'll just go out and say it that it's far less likely now that we got that big move than it was before the big move. In addition, I think one thing to think about with SVXY is, and one of the reasons why they elected to keep it open, this is the same company that also manages UVXY and VIXY. So having that short futures portfolio against their long portfolio, believe it or not, gives them a lot of. So ProShares doesn't end up owning actually much of a basket of anything. So having that product mix actually is a major risk management tool for ProShares.
You can't really have one without the other.
Right.
It would be dangerous.
Right. So like here's why they want to have that whole mix, is that this way, if SVXY did blow up again, they've got UVXY, and let's say the absolute worst happened, and we had just a Sigma 9 event, and VIX is 100, and the VIX future and the March future goes from 17 to 50, right? And SVXY has a daily negative return of 200%, right? If without a UVXY, ProShares themselves is in danger of going out of business, because they've got a negative net asset value. What are they going to do? Go after the holders to try and get money out of them? Good luck, right? You're in huge trouble, right? You've lost more than you were carrying. By carrying UVXY and VIXY as kind of an opposite, that blow up now has a long portfolio where UVXY and all those other pieces have done well enough that they kind of cancel each other out. So ProShares doesn't have a liquidity issue. So from a risk management perspective, you're probably not going to ever see SVXY go completely under. But you obviously, unless you got that, unless it actually went to zero, then SVXY they will likely keep it open.
Here's the flip side of the SVXY coin. Alonk, or maybe Alan C, asking, what are the odds of a reverse split for SVXY? I think they've got. I don't know. He's got a lot of VXX on the brain. I think, yeah, Mark.
Yeah.
He thinks every vol product does a massive reverse split every year or so. I don't know. What do you think? What do you think of the odds of SVXY going 5-for-1 anytime soon?
I mean, if we have another event and it goes from 13 down to 2. I'll bet you they do have a reverse split. Although I would remind people don't remember this. In 2011, maybe I want to say 2011. Maybe it was later than that. But I want to say 2011. Didn't XIV get down to like $4 or $3 on that big contango move that took time? Does that sound right? This predates SVXY.
Kevin, you're the keeper of our historical data because Russell is in here. Any thoughts on that?
I think XIV got really, really, really cheap, and they did not reverse split it.
For some reason, my quotes on XIV are suddenly not coming up
gone.
on me.
No,
right when I
XIV is
need
gone.
them. Of course,
XIV,
obviously, but I'm looking for historical.
So no, they're not. It's just gone from LiveVol, and Nasdaq delisted it, so LiveVol delisted it.
Can't even get my historical. What fun is that? Of course, we should mention that RIP, all things XIV. What was the final price? $5.99, I believe.
$5.99.
So what a.
Are you out of your mind?
What an epic turn of events for all things.
And it was what,
XIV.
140 less than a month ago.
Yeah, no, a couple of weeks ago. Let's see. What do we got here? Scott Somer chiming in says, #VolViews. The 25 Delta March VIX Strangle 14.5 put, 25 calls is selling for $1.60, half an hour before VolView starts. I guess he just wanted to tell us that. He wanted us to go buy a Strangle right before the show starts. Well, if history is any precedent, we tend to cause some vol here on this show. So maybe that is a good buy of a Strangle. I don't know how we got on those strikes. 14.5, 20. There you go, Mark. Load that up on your fund. The 14.5, 25 Strangle. He wants us to buy it for $1.60. Let's see.
No, thank you.
Yeah. How did I know you were going to say that? All right, let's wrap up on this one before we get to our crystal ball. I like this comment, actually. This came in from Pete Yarbro. I think he probably copied it. He probably saw this. He says, I feel like I have a better understanding of VIX and the volatility ETFs than some very high-profile stock market commentators, and all I do is listen to a podcast. Well done. I think you do. What's your name? Pete. Pete, you probably do. Judging by what I've heard from these quote-unquote stock market commentators about VIX over the past week, I think I could wholeheartedly say that you do. But that said, yeah, we try to do some good education here on the show. A lot of people chiming in on this. Doug Shogun saying Volviews rules. I'm with you, Doug. Dog Shogun. I like that name. Volviews does rule. I'm with you on that. Olive Trader saying it's amazing what you can learn from podcasts. Yes, it is amazing. So ballyhoo to all of you. We love all of our Volviews crowd, and we're happy we could teach you a thing or two about a thing or two, particularly in times like these. I think we all need a little.
I believe Peter Yarbro is a big fan of the South Bend Cubs.
Oh, really?
I believe so.
I do not know him personally, so I'll take your word. I'll take your word for it. All right. Speaking of taking our words for it, it's time for you to take our words on our very, very crazy VIX prognostications. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. We have a bit of a historic, unprecedented week here because last week was so crazy. And on top of it, we had craziness going on here. I think you guys were in Orlando. It was nuts. So we ended up not having time to do the crystal ball last week, which has never really happened before. Also probably good because we probably all would have gotten wiped out given the fact that it's been cut very aggressively. More than it was at 40, I think, when we were closing the show last week. So I would have been lower. I don't know if I would have been this far down. But that said, maybe we'll go. I like to go first because I'm the host, but that I wouldn't do that to you guys. So I'll give Kevin pride of place because he's beaming in, taking the short notice fill for Russell today. I'll give him pride of place, let him go first. Kevin, what are you feeling for this time on the show next week? And remember, Russell's going to end up wearing whatever you predict. So if you pick something good, he'll take credit. He'll take credit for your victory, and if it's bad, he'll look terrible. So keep that in mind as your prediction.
So my guess is going to be that we stick right around here. My sense is that we have seen the big shakeout. We've also seen the headliner index, the S&P 500, trade somewhat technically in that it went on a cash basis pretty much right down to its 200-day moving average. And my sense is that we will now likely chop around the 50-day, which we kind of have been yesterday and today, for a week or two as the recent realized volatility kind of works itself out. It's not all that often that you have, like, we have 30-day historical volatility in the SPX up around 22 right now. So a meaningful amount over where even our cash VIX is at, and the 10-day volatility, which again is going back to like incorporate February 6th, is way higher, like 36. So my sense is we're not going to take VIX or the futures in a whole lot over the course of the next week. So I'm going to go 19 even.
There you have it.
19 even. All right, I'll put you down for it. I already put down mine. I'll go next while Mr. Sebastian is busy over here. I was feeling a little bit lighter. I already wrote down my answer. I'm going to say 17 double, 17.55. I think we'll come in a wee bit from here, but not a ton. But I could certainly see an argument for where Kevin was going for as well. And last but not least, Mr. Meatball, what are you thinking? Like 12, 42? What are you feeling?
Oh, I'd like to buy what was that strangle that the customer
I think it was
wanted me to?
14 and a half, 25.
I'll buy his strangle. I'll do the 14 and a half, 25 strangle.
For $1.60.
For $1.60. No.
I love we're getting trade recommendations. Buy that strangle.
Yeah. I'll tell you. I'm going to make my outlook I'm going to make my position my outlook. All right, and I'll say 16.
Interesting. Aggressive, sir, to the downside, but I would expect no less. There we go. That music, listeners, means, unfortunately, we've come to the end of an epic German, epic couple of weeks it has been.
Yes, it has.
On all things volatility views. You know, you wanted some vol, you wanted a little bit of spice in your lives, listeners. You got it over the last few weeks. I hope you liked it. I hope you're happy. I'm sure there'll be more to deconstruct and discuss in the coming weeks. We're certainly not done with all the ramifications of everything we saw over the past couple of weeks. And who knows, maybe see more of that play out over the coming weeks. But let's go back around the horn one last time and see what everybody's cooking up. Kevin, let's start with you. If I'm interested in maybe taking some courses at the Options Institute, maybe I want to read your blogs, where should I go? What should I do, sir?
You should go to cboe.com and poke around in the news. One of the things that's kept me busy, and again, I'm gonna talk my book to steal Mark's lingo real quick, is looking at the relationship between Bitcoin and VIX lately. Just real quick, like VIX Cash peaked on the 6th when Bitcoin and global markets kind of made meaningful lows. And since then, Cash VIX is down like 64%. Bitcoin futures have rallied about 70%. It's just something I'm going to continue to track, and looking at relationship stuff or spreading risk has always interested me. So that's where my head's at.
Yeah, everyone's on that 10-day vol tip of late you mentioned, Kevin. I think Bloomberg posted an interesting chart because, of course, 10 days at the time on Wednesday included all the madness from the week before. So the 10-day VIX vol peaked at 520%, which is the highest ever in VIX in the VIX complex history. Also spiked over the Bitcoin peak, which was 501%. So it just goes to show, if you play with the frame of reference enough, Mark, you can get the chart to say anything you want. All right, and last but not least, Mr. Meatball, if I'm interested in maybe buying some strangles with you in VIX, where should I go? What should I do?
Yeah, so if you're interested in a smarter way to own the S&P, one that has a hedge, one that where our hedge actually outperformed how much we lost on the S&P because vol blew up so much, then reach out to me, Mark at Carmeline Capital. I'd be for accredited investors, we'd be happy to show you the smarter way to trade and own the S&P 500.
All right, everybody, that's going to do it for this week's Volatility Views. If you're listening live, stay tuned. We'll play some fun stuff for you in the interim. You got about 25 minutes or so till we're back with all things TWIFO, talking a lot of vol and probably the index space. We'll probably get back there, as well as the commodities and all the other fun stuff there. So stay tuned for that. Otherwise, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We are committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.